All right, now that we are halfway done with the year, I thought it would be great to kind of go over how the market's performing. We'll specifically look at quarter 2 on how this quarter performed. And then to give ourselves some context, we'll take a look at how the market compared to quarter 1 as well as overall market last year to see if we can kind of point out and identify any trends that might be occurring and to see which way that the real estate market, is moving. So on your screen here, if you're looking on my screen, this is actually an analytics software that has all the data and information in a visual format of our real estate market. Here we're looking at the number of units sold during the time frame of January 1st, 2018 to 6/30/2019, which is the end of the second quarter. And so right here in this box, if we're looking, this is the number of units sold. This green line is single family resident homes, and the orange line is condo units. So we're only specifically looking at the residential market and not the commercial side or anything like that. So as you can see here, if we look from April here to May or till June, you can see an upward trend in the number of units sold, which is always pretty normal, fairly normal, as we expect to see some seasonality in the business. A lot of homes sell more in the springtime than they do, obviously, in those winter months of January and February. And so the only thing I want to point out here is that, as we can see, if we're looking at 2018 here, kind of for the same time period, April through June, you can actually see that line is above 600 for number of units sold by month. So that means we're selling, for the single family resident homes, we're selling about 600 homes. We were 600 homes per month at this time last year. But this year, it doesn't look like we actually ever crossed that 600 mark here. And as you can see, the peak there is 584 units. That means in the month of May, we only sold 584 units. So what we're starting to see is less homes being sold from this year compared to last year. And you can actually see this if you look down here at the bar graph below it. In 2018 and 2017, we can see that there's a downward trend of the number of units being sold year to date. However, I do want to point out that if we come over to here, we can see our median sold price point has a general trend that is increasing, and that means house prices are going up, and they continue to go up, yet despite the fact that we are selling less units. Typically when that happens, when we're selling less units, we might start thinking that, hey, it's a slower market, we're entering into a buyer's market, and it doesn't seem to be the case, and I'll show you why here, because of our inventory here. Now it looks the same page, but do note that we're looking at active inventory units here for the same time period. And this is the biggest thing that's driving up prices and continuing to drive prices up, despite the fact that we're selling less homes per year since what appears to be since 2017. Because here you can see in 2018, from April to June here, we're probably around the 1250 mark, the 1200, kind of get up to 1400 there in June for inventory. But this year, we really don't even get to the point of 1200. That means, obviously, if you're looking for a home, the inventory is just super low. There's still nothing out there. And if you're thinking about selling a home, or you're selling a home right now, it's good because there's not a whole lot of competition out there. And that's what's driving up price, and that's what's driving up demand. As you can see here, we take a look since 2014, basically when the market wasn't doing very good. It was pretty terrible. We see in 2015, we had 5,650 units in inventory, homes for sale year to date. And we've sharply decreased that to 3,167 year to date. That is just a crazy low inventory amount. And as you can see, that's what it's usually like us real estate agents like to express it as, the month supply of inventory, or what we call the absorption rate. And that's a measurement of how long would it take to sell all of our current inventory at our current sales rate. And we can see that we're at a point in May. In May, we hit less than 2. That means in less than 2 months, given our current sales rate, we would have every single home on the entire market sold. It would be gone. There would be no other homes available. And in a balanced market and in a normal market, it's usually around 4 to 5 to possibly 6. And then obviously in a buyer's market, we're looking way past 6 months, 7. We're looking at 7 months, 8 months, 9 months. And you can kind of see that here, the month supply of inventory right below it in the bar graph by year, because in 2017 the single family residence peaked over 6 months, and then since then it's been on a pretty steady decline for it. We've kind of held pretty even here, it looks like, for the single family residence from last year to this year, but in general, just due to the seasonality, we're way at 1.9. So that means if you're going out looking for a home, it's going to be super tough to find a home. Everything's selling quickly still, and that inventory is causing a drive up in prices. So that is kind of our Q2 outlook. I think Q3 will be much the same of Q2 in terms of house prices going up, as well as inventory continuing to be low. Of course, inventory will spike just due to some seasonality, but we'll have to look forward to see how Q3 shapes up.